Hi guys, and welcome back. We are in 3535 day dawn right now. I figured I'd plug that first before I get into these numbers. We are going to cover lots of stuff today, but first I want to go into some numbers that are current for Las Vegas. I pulled all of the active listings that are available right now, and there is just over 11,000 total. So it's about 11,033 estimated, and that's single family homes, that's condos, townhouses, and high rises included. So it's 11,000 total. The interesting part was the majority of those homes are listed between $300,000 and $500,000. So almost 5,000 of the listings were in that price range, and that is a lot. Now, I took it back further. I wanted to see a year ago where we were at. And a year ago, August 2021, we had 3,256 single family homes listed, and we had 687 condos and townhouses. So that's just under 4,000. So between 1 year difference, that's huge. That's a lot. We've seen quite a change in the last year. So as agents, especially like at the beginning of the pandemic, a lot of people were asking, you know, are we gonna have 2008 again? And it's always a question we're asked. It's always something that, you know, I think as a real estate agent, it's like PTSD. How can we compare it not to that? How does it not look like that, right? So, you know, I've done that comparison. I've definitely said many times it's different, but I actually did a lot of research the past week, a lot of late nights, and I found a lot of similarities between 2008 and right now, and I'm going to get into those with you.
What you're seeing here is the lead up to the current rate hike. If someone were to ask what's causing the current downturn in the housing market, someone would probably say interest rates, and they wouldn't be lying to you. But we're going to dig a little deeper. And if you ask someone why there was a crash in 2008, more than likely they're going to say subprime mortgages, and they wouldn't be lying either. But take a look at this. Here's the rate hike from 2006. This is the lead up to the 2008 crash. Now the next question is, why is there an interest rate hike? Well, the answer we all know now is inflation. The Fed uses interest rates, raising them in order to combat inflation. Here's our current inflation chart, all the way up to a month ago. Now let's take a look at the inflation chart at the lead up to the 2008 crash. You could see that it topped out at 5.6 in July of 2008. So the next question we ask ourselves is, why is inflation going up? The current answer right now was energy. Crude oil is the heartbeat of the market. When the gas prices went up, soaring, and everything followed, food, everything rides on that. Well, take a look at this. Oil prices surged to the highest since when? 2008. That's right, ladies and gentlemen. We had a little something called the oil shock of 2007-2008. The run-up was caused by strong demand during stagnating world production. And we're not done. Furthermore, here's a look at the S&P 500 chart. This is 2008 and 2022 running up against each other. The white line is 2022, and here's where it stops. So you can see a little more clearly where we could be at. It's not for sure, but it appears to be running parallel. And housing affordability looking similar as well. People don't want to pay high prices at a high interest rate. Now, this comparison is actually a little bit different. The annual home price chart of 2005 shows the hotbeds were Florida, Nevada, Arizona, California, all of which got hit very hard during 2008. Now here's a look at 2021, the lead up to 2022. Annual home price growth is pretty even across the board.
Now this week we've seen the proverbial doo-doo hit the fan. as far as the Fed is concerned. The market reaction to Fed Chair Jerome Powell's speech August 26th was pretty, well, it was received pretty poorly by the market. And he said, and I quote, you know, there will be a lot of pain to some households and businesses due to the reducing inflation. And them raising rates more, which is what he was getting to. They're going to have to raise rates. They're going to have to do things to control the inflation. And in their mind, controlling the inflation means raising interest rates to combat that. And we're going to see more rate hikes coming soon. And the market didn't like it. The market went red. And then we saw the 10-year yield jump today in particular. It was jumping all week, but it jumped to 3.27, I believe it was, which is a lot. If we keep seeing that spike, like I said in my last update, I said, you know, what we don't want to see is a huge market sell-off. That's what we're going to see if it keeps spiking the way it is right now. A lot of people are moving into the dollar. They're moving into currency. And so we're seeing a lot of that, and it makes sense. So one of my amazing social media acquaintances sent me this, this chart the other day, and I thought I would throw it up here for you guys to take a look at it, because it was, not to say surprising considering what's going on in this environment, but it was definitely, I guess disappointing would be the word.
This is a look at the real disposable personal income chart. And look at that drop off. More to my point last week when I was saying that interest rates aren't the only reason why people aren't buying homes right now. They can't afford to buy homes right now. Inflation has been incredibly straining. People don't have extra money to spend right now. They're hanging on to their dollars, and it makes complete sense.
And a recent report from Bloomberg stated that 5.4 million households are late and they're not current on their current mortgage or rent payment nationally. And that's a very big number as well to look at. So like I said before, we saw the 10-year yield spike up to 3.275. That's a huge increase. And if it keeps spiking up like that, be prepared to see sell-offs. Like I said the last few, it's gonna create a strain on liquidity. So that's also part of our concern is the strain on the liquidity across all markets, not just one. This isn't a one, and it's like I said in the last video too, Michael Burry said this is the biggest speculative bubble of all time in all things, right? So, and I keep saying that because it couldn't be more true, and we're seeing it happen live in real time. And thank you guys again for tuning in. Thank you for liking and subscribing and supporting my channel. If you need any real estate help, my information's in the description, and I hope you guys have an amazing weekend.